Today is Monday, February 26th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, particularly the stocks and the indexes continue to show strength. What is your near-term outlook for stock index futures?
Okay, well, the stock index futures have performed very well this year, despite the Federal Reserve that has made it very clear that they are in no hurry to pivot to accommodation. So some other bullish fundamentals must be at work here to support futures that are not quite that obvious yet. Possibly it could be earnings reports, something else. But for stock index futures to be higher on limited news, especially with the Fed really not giving us any guidance as far as when they will be cutting rates, that in itself is a sign that stock index futures will probably continue to work higher, at least over the near term.
And Alan, when we look at the stock index futures, when we look at the interest rate futures markets, what are the fundamentals and technicals saying about this market?
Okay, so on Thursday, last Thursday, we had the 30-year March Treasury bond futures falling to their lowest level since December 4th of last year. So this market is responding as you would expect to a Fed that is likely to be slow to become accommodative. So there has been a bit of a rebound in the bonds, but not at the short end of the curve. Short end of the curve futures remain right near their recent lows. So the fundamentals and technicals still remain bearish on balance, especially at the front end. So I think we'll see lower prices across the board for the interest rate futures markets. They are responding as you would expect them to respond to the fundamentals. And of course, the technicals still remain, I think, very soft.
Alan, how many rate decreases in 2024?
Well, I remember late last year, the talk was there could be 6 or 7 rate cuts. The Fed said there might be 3. So since then, the market has changed its opinion. Now maybe 3 rate cuts. I'm of a mind to think there could only be 2 rate cuts. And right now it looks like the June meeting is when the consensus view is for the first rate cut. I would not be surprised if they bypass that one. So I'm looking for fewer rate cuts than the consensus view, maybe only 2 this year.
Last question, Alan. What potentially market movement reports will be released this week?
Okay, so Tuesday we have January durable goods that's guessed at down 4.5%. February consumer confidence index at 115. Wednesday we'll have the fourth quarter gross domestic product up 3.3%. Thursday jobless claims at 210,000. Personal income up 0.4%. And the Chicago PMI at 47.3. And then on Friday, the February PMI manufacturing index at 51.5 and the February consumer sentiment index at 79.6.
Thank you, Alan. Mark, looking at the grain markets, continue to be sitting down here in the lowlands. With corn prices dropping below $4 last week, what will it take for prices to stabilize or rebound?
Well, corn prices just continue to suffer from a lack of bullish news, while exports and corn use in the production of ethanol really have been at decent levels. It just hasn't been enough to put much of a dent into the nearly 2.2 billion bushel carryout we've been forecasting here from last year's harvest. New crop projections are even more bearish. Speculators continue to pile on the short side of the market. They're position reaching a new all-time record at short 340,000 contracts last week. And take into account what was done at the end of the week after the CFTC reporting deadline, it's probably closer to 360. Prices have undercut the low end of my range, which was 4 to 4.25, and I suppose we could dip down to 375 level if nothing changes here for the next couple of weeks. But at some point, all this bearish news I think is going to be discounted by the market. I think we're getting pretty close to that being the case. Market's oversold, having reached lowest levels now in over 3 years, and both new crop corn and soybean prices are below a U.S. producer's cost of production. So eventually these low prices will cure the low prices, and we are expecting an announcement later this week from the EPA on whether they'll allow corn-based ethanol to qualify for the tax credits under the production of sustainable aviation fuel, which right now I think the market is currently discounted as that being a no.
Yeah, I would think that some of the spec money would quit now, in regard to adding of short positions. I mean, how much is there really to gain from down here?
Yeah, that we'll have to sort that out over time. But yeah, I would think that we'll start to see them reconsider how much money they can make by being short from these levels.
South of the border, Mark, how are the South American crops shaping up?
I think weather in South America has been mostly favorable in recent weeks, which has obviously contributed to the price decline. Early season dryness across much of central and northern parts of Brazil. They've been well watered here in recent months, but we still have a pretty wide range of production estimates due to this early season dryness. Brazilian soybeans now are 40% harvested, and that is above the normal pace. Most production estimates are coming in about 145 to 150 million metric tons, and that's the USDA is well above that at 156. So second corn plantings they're about 75% complete, a historic quick pace as well. Production prospects there are on the rise, but similar to soybeans, we do have a pretty wide range of production estimates, and USDA here too is the highest at 124. That's well below last year's record production of 137. But we're expecting big pickup in Argentine crops this year relative to last year, where they had a big drought. So collectively between the two, we're expecting record production combined.
February 26th and 70 degrees in Chicago here, Mark. With spring-like weather across much of the central U.S., how's the winter wheat crop looking?
Well, all in all, I think it's shaping up looking fairly well right now. Acres came in below expectations at 34.5 million acres in January. That was down over 2 million from a year ago. Moisture levels across the southern plains have been restored from last year's drought. Only 12% of the cropland area sits in drought right now versus 57% a year ago. So with the recent surge in temperatures, however, there's absolutely no snow cover at the moment, and that does make the crop vulnerable to damaging cold if we do get any Arctic blasts dipping down from Canada. So that's something we'll need to monitor here as we get into the spring months and the crop breaks dormant a bit. Right now, I'd expect production to rebound a little bit with higher yields and fewer acres being abandoned. I'm looking at about a 1.3 billion bushel crop right now.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.